Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be talking about my portfolio over the 9th week of 2025. We're going to talk about the account value, the distribution we made, what my HELOC loan repayment is currently at, and how my account performed over this last red period. The market was a little bit down, and let's see how the account performed and maybe where we can potentially make some tweaks. So let's get started. So looking at my account value currently, it is at $89,264.20, right? If you guys have been following this channel, last week I added about $10,000 into account. That is the first time I have added money into this account since starting this project about 9 months ago. I started June of 2024. So I thought there was a downward trend in the market. It'd be a perfect opportunity to throw some money into the market and then jump into some very safe, I call them tier 3 funds, and I'll explain that a little bit later. But I bought about $5,000 of gpix, and then I threw in the extra $5,000 to run a SPY call because I believe the SPY is going to recover some of its value. So I wanted to cash out a couple $100s. So that's kind of the thought process. Otherwise, if I did not throw that $10,000 into this account, the account would be valued at that $79,000 mark. But let's dive into the actual number a bit. So over this day, it looks there's a cool little green, marker, but that wasn't the story over this last week. Let's go over the last week period. Over the last week period, this account lost about $13,000, which is relatively accurate, right? I botched one of my options in MSTR, and I'm going to explain that in a minute here. And then just in general, because of the volatility of these high income ETFs. So if the S&P 500 goes down, like 0.5%, a fund like yieldmax, because it's like a leveraged fund, is going to go down, 1, 2, maybe even 3 times more than what the actual stock market's going. So therefore, whenever you create these high income ETF accounts, I have it broken down into 3 different tiers. I have my tier 1 funds, tier 2 funds, and tier 3 funds. So my tier 1 funds are more my volatile, aggressive, high yielding funds. That's my yieldmax, ymax, ymag, nvdy. So the goal here is, at least for my nvdy holding of that 1,500 shares, I use these 1,500 shares to pay back my HELOC loan, right? nvdy, I think, still has competitive advantage in the market, and I think it's going to continue to grow, and it's a market leader. So I'm basically using my nvdy to pay back my HELOC loan. But then for my ymax and ymag holdings, right now I'm currently reinvesting every single one of my distributions back into it. That's under my cost basis. So the thing about ymax and ymag is they're going to be a lot more volatile than just a normal S&P 500. Every time the stock market, that SPY goes down, that 0.5%, these funds are going to get completely slaughtered. So let's just take a look at ymax for a minute. Over this last week period, it's down 7.7%. That's pretty bad, right? So, but then let's look at the SPY. Sorry, I was looking at Tesla earlier. Cool. If we look at the SPY over that week period, it's only down 1.23%. So basically, ymax lost almost 4 times the amount that SPY did. So that's why whenever we come up with a high income ETF account, like what I'm trying to do here, right? Because I already have a 401k fully maxed out every single year, Roth IRA fully maxed out. But then for this account, I wanted to produce an extra distribution. But the problem is like, you're not going to be making money if on a downward trend in the market, you lose 7% when the S&P 500 loses 1%. That is not a good mechanism, right? So for me, I like to balance out some of my volatile high income ETFs with other ETFs that are high income, but not as volatile, right? So yieldmax, definitely tier 1, but tier 2, it's more balanced. I call it my round hill, my xdte, and then my rdte, right? The distributions aren't going to be as high as a yieldmax. The share price is going to be a little bit more expensive, but the volatility isn't going to be as much. And we'll take a look at xdte, how it performed over this last week, right? Yeah, and for xdte, which is a distribution pair, it lost pretty much the same amount as the S&P 500. So for me, this is a definitely good bet or something to invest in if you want to produce a distribution, right? I'm even tempted to sell maybe some of my ymax or ymag and just buy more of this xdte because it's very stable and it pays a decent distribution. Cool. And then what I consider my tier 3 is a lot more safer funds. So that's more like a gpix and a jepq, right? And if we look at gpix over that week period, see how it performed. gpix lost only 0.5%. So it actually did better than the S&P 500, and it pays a distribution of a yearly distribution of 8 to about 10%. So therefore, tier 3 is more stable, like appreciating funds. In addition, it pays a distribution, but it's not going to be as high as a yieldmax or a round hill fund. And then next we have our kurv funds. And that's, I consider kurv like a tier 3, like a tier 2.5. It might even be a 2 after how this last week played out. So let's just take a look at amzp, how it performed over this last week. So over this last week period, it lost about 1.16%. So that's pretty good, right? So I would definitely call it maybe like a 2.5. The share price didn't depreciate too much, but the distribution's a lot higher than like a gpix or jepq. So definitely it's like somewhere in between that 3 and that 2. So that's kind of how I balance out my account. Is I have a little bit of yieldmax, a little bit of round hill, a little bit of like gpix, jepq, kurv funds. So they kind of like I have a different tiered approach, right? And over this last week period, I'm definitely thinking and debating maybe I should lower my stake in ymax, ymag, so that I don't lose, over a week period, $13,000 in value. Yes, the distributions are higher, but at the same time, we're supposed to protect our actual asset, right? And because we're borrowing money and we're also investing into a high income ETF, it wouldn't be the smartest idea to throw all of that into a high income ETF. So people out there that are highly invested into one high income ETF and margin against it, and was margining quote unquote to the tits, maybe this past week you guys realize, hey, this isn't maybe the best approach moving forward, and definitely diversify into a little bit more smarter, less volatile funds and less distribution paying funds, but at least you'll be able to sleep at night. So that's kind of my thought process on my account itself. I kind of explained the account with like my round hill, yield max, my gpix stuff. So I'm not really going to talk too much about the numbers, but I'm going to talk about a mess up I did for myself running an option. I didn't think that there was going to be a massive dip in Bitcoin. So I basically bought a MSTR call thinking, because it was hanging around that $300 strike or that price. And let's just go to msty or MSTR. I was thinking the share price was at like a nice, $300 a share. So I bought a leap in this $300 mark thinking, okay, usually Bitcoin is going to shoot up the next 3 months. So Bitcoin was going to shoot up because we were at this low mark, right here. And I was thinking maybe it was going to recover upwards, but then it went the complete opposite direction. So basically I put a stop loss on my MSTR call. So I lost about $3,500. So that's why this week, when you see what my distribution for this week was, it was only like negative $101, is because I botched up a option on MSTR. Outside of that, my distribution was somewhere between that 1 to 2,000 range. We'll go into the spreadsheet for the exact number in a second here. Yeah, so the whole point of the channel is for me to be transparent, and I will tell you all of my losses. Did I want to come on this microphone and show my face and be like, hey, I lost $3,500? No. Did my account down $13,000? No, but at the same time, I think it's very transparent, and it's good for people to come out and be honest. Some people, they make a video and then they blurred out their account values because they lost so much money because they were advising people to borrow as much money as possible. I never thought that was a good idea. So therefore, guys, whenever you're coming up with a specific margin value, pick a number that you're going to be able to sleep at night, because guess what? This is your money. I technically borrowed the bank's money to throw into this account, but $10,000 is my money and I still want to protect it. I'm just throwing that out there. So with that being said, guys, let's go over to the spreadsheets and look at what the numbers look like. And yeah. All right, guys, now that we're at the spreadsheet view, let's dive into the numbers. So let's go to February 28th, which is the 9th week of 2025. Let me zoom in a few times here so you guys can see better. But for the 9th week of 2025, the account was actually negative $101.81 for that week in distributions. That is the first time in this account that I've actually went negative distributions. The reason why I went negative is because I botched a MSTR call. The lucky part is I still made a decent amount of distribution, where that loss in that call, I didn't necessarily lose too much money. I can make that $100 back by the next week's distribution. Cool. But then if we didn't take into consideration that call that I ran, this is how much money I made. Account total is how much money that I paid for the shares themselves. In December, I had that redistribution from nvdy to like the tier T3. Oh God, I can't say it. three-tiered approach so I can protect my account from fluctuations in the market, which has definitely helped me this past week. Because if I was highly invested in NVIDIA, I'd be losing a little bit more money. But how much money I paid for each one of these shares was $299,771.05. The number that you saw in Robinhood was because I have about $200,000 in margin. If I sold out of every single one of my stocks and ETFs, I would have about that $89,000 left over. But how much I actually have invested is this $299,771 mark. So now let's zoom into what the numbers look like after February 28th. If we scroll over to the right, okay. So for the 9th week of 2025, the account is at $278,269.97. Right, it definitely was on a little bit of a downward trajectory because of how the market was performing. It is what it is. The highest point this account has ever been was at $301,711.88, and it hasn't hit that high point in the last, I don't know, 1, 2, 3, 4, 5, about 5 weeks. Cool. So now let's go over to xdte. So for my xdte investment, I paid about $58,750 of my margin to buy these shares. And with my xdte, anything that's below my cost basis, I reinvest. So that's how I'm able to maintain this share price, is because all of my distributions I'm reinvesting back into the fund. So if you look for February 28th, my account value is only down to $57,959.57. So I'm basically only down about $800, even though there's a massive downward trend in the market, which was definitely, I like xdte because it maintains its NAV a lot better than yieldmax and has a high distribution payment. So we'll see how yieldmax performs over the next couple of months. I may use yieldmax and ymax and ymag as a, how would you say, maybe a tax loss harvesting near the end of the year. But if they're continuing to perform poorly and they don't maintain their NAV, I'm just going to cut them and take that money, either put them in Kurv, put them in xdte, or maybe like gpix, jepq. So it's definitely on the chopping block. If I'm talking about it now, maybe I should do it already. Hard to say. But we'll look at the numbers and then we'll make an assessment when the time comes. And if we look at the xdte premium for February 28th, that was $245.16. Now moving on to rdte, my initial investment was that $59,295 mark. And for February 28th, that number was $56,037.76. So starting this project, I'm down about $3,300. But if you think about it, I like having some exposure into small caps or the Russell 2000. I'll continue investing into it unless there's a certain threshold where I just don't want to invest it. I'll just put the money into xdte. Let's come up with that number today. We'll make that number $55,000. If it goes below $55,000, we're cutting ties. We're just going to throw into xdte. Like I was saying, the rdte premium was pretty good. It was that $284.26. So that was pretty cool. So let's talk about ymax, tier 1, most volatile. How is it performing? So for ymax, my initial investment in ymax was that $18,882.40. However, for February 28th, it's at $16,964.81. There's a lot of fluctuating with this fund. Sometimes it's at that $18,000. It drops down to 17, up to 18. And then now it was at 18 and then dropped down to 16,000. So we're definitely going to keep an eye on the performance for this fund. If it continues to perform poorly in a bull market and going up, we might have to cut ties with it. However, we'll see how it performs the next couple of weeks, the next couple of months. Not necessarily ready to make a decision on them just yet, but maybe if this fund goes down about that $15,000 mark, we might just cut it and then reinvest it somewhere else. But there'll be some tax loss harvesting. I hate losing money, but it is what it is. Now we're going to talk about the ymax premium. So the only thing that gets investors to come back to yieldmax is the premium. It's that poor man paradox where all the poor people want to hit it big with the lottery, so they're the ones buying lottery tickets, but they're the ones that can least afford it. Same thing with ymax. The premiums are so good that you want to keep coming back, or yieldmax, and you keep coming back. And so for me, I'm definitely on that line where the only holding I really want to have of yieldmax is that nvdy, just to pay the HELOC loan. And once that HELOC loan is paid off, I'll probably also cut nvdy as well. And that's kind of my thoughts, but let's continue moving forward. Ymag, my initial investment was at $19,999.65. Currently, Ymag, how much I have bought, is at that $17,769.96 threshold. I don't really have anything more to say there. Continuing forward. So the Ymag premium was $188.86. Moving forward, amzy, my initial investment was at $40,000. And then currently my amzp investment is at $36,308. And it definitely has fluctuated quite a bit. Over the last 3 weeks, it has gone down substantially. The premium was pretty good, and the share price doesn't now erode as much as yieldmax, so that is that trade-off. So for Goop, my initial investment was at $20,000. Currently, it's at $18,772. And looking at this chart, there's a little bit of a downward trajectory since the beginning of February. It kind of teeter-tottered back and forth from that 20,000 to 19,000 to 19,000 to 20,000 back down to 18,000. So we'll see if it goes back up. Not necessarily too worried. Google's a good company. I believe in Kurv does a better job than yieldmax. Moving forward to the Goop premium, no premium for the last week for Goop, but the week before that was $280, which is quite nice for a $20,000 investment. Now let's talk about nvdy. So for nvdy, my initial investment was at $33,884.55. Scrolling over, currently the share price is at $26,175. So definitely taking a little bit of a hit with nvdy, but nvdy just paid out a massive premium of $1.6 per share. And so I basically made $2,400 this last week. So that was quite nice. Cool. Moving down to the premium. Yeah, we talked about it. I did get the premium this week, which was $2,417.70, which I love, which was nice. Looking at the gpix value, right? My current investment of gpix is $27,043.97. I did add that $5,000 and I incorporated this into my cost basis. And currently, from that $27,000, gpix is down a couple $100, but downward market, and I think it will recover relatively soon. Maybe even within this next premium. So for the gpix premium, nothing happened last week. It's going to pay out next week. Moving forward to jepq, my initial investment into jepq was $21,915.48. And currently jepq is at $21,390.80. So I'm only down about $600 with a downward market, so not too bad. Moving forward, for the jepq premium, nothing paid out next week. It will be paying out the first week of March. Cool. That wraps up all the different distribution talks and premium and share price value. So let's go over to the HELOC loan. All right, guys, this is going to be the last view I show you before I close up this video. So currently I have not made any more payments to the HELOC loan. It was the nvdy payment of about $2,000. HELOC loans at that $47,188.94. Current, Robinhood share price was at $89,000. And if we subtracted the Robinhood from the HELOC loan from this project starting in June of last year, I'm up $41,538.72. And that's not using my own money. Cool. I mean, maybe the $10,000 is a little bit of my own money, but predominantly this was used off of other people's money. So guys, that pretty much wraps up the video. Let me give you some closing thoughts. All right, guys, here are my final thoughts for the 9th week of 2025. The market took a bit of a beating, which was not very fun, especially if you're invested into the yieldmax funds, which definitely lost a lot of their share price because of just the nature of the funds themselves. So hopefully, if you guys are not necessarily diversified into safer but yet high distributing funds, maybe this would be that kind of, kick in the ass that we needed to kind of get that ball rolling, right? Maybe we shouldn't all be vested into msty and maxing out margin, right? So for me, because I had my account diversified into those 3 different tiers I mentioned earlier, like the tier 1, tier 2, tier 3, and having different amounts of money in each, I was not margin called and I was not at risk of a margin call because I balanced it the right way and I had money left over, right? Some people, they had enough of a buffer that, you know, day 1 of a downward market, they were fine. Day 2 of a downward market, they were fine. But then day 3 and day 4 of the market, that's when people started, you know, understanding if their account was created the right way. So for me, I was not at risk of a margin call. And because the opportunity presented itself, I had cash on the side that I threw into the account so that when the markets do recover a bit, I'm going to cash out a bit from those gains. So those are my thoughts on the market. Besides that, guys, I don't have much. I have one, I think, 13-month leap on the SPY right now that when it went down to about 585, I bought that leap. So I'm just kind of waiting for it to go back up. And then I'm going to cash out on that $300, maybe $400 range. But yeah, guys, appreciate you for stopping by, watching my channel. Enjoy your journey out there, guys. Have fun. Want to see what you guys have to say in the comment section. Let me know how your portfolios have done. Yeah, guys, can't wait to hear from you. And if you haven't subscribed yet, and if you've been watching my content, it costs you nothing to press that button, but it means the world to me. But yeah, thanks, guys. Have fun. I'll see you in the next one.